Konnichiwa, Zamurai Engineer. In this chapter 1, Managerial Accounting and Cost Concept, we are now on module number 3. Learning goals in this module involve distinguishing between product cost and period cost and give examples of each. Okay, let's take a look. What are the product cost and what are the period cost? Product cost versus period cost. Let us take a look first under product cost. It includes direct materials, direct labor, and manufacturing overhead. So those are the product cost. Okay. What are the period cost? Period costs are not included in the product cost. They are expensed on the income statement. Okay. What are the example? For example, product cost, you have inventory, cost of goods sold, they are product cost. Inventory is in the balance sheet. That is inventory, meaning you produce many products and those products are still in the stock room. It's not yet sold. Okay. Cost of goods sold. So there is a cost in coming up with those full product. So those costs that you incurred in making the product is what we call cost of goods sold, and that is to be reflected in income statement. So inventory to be reflected in balance sheet, cost of goods sold, income statement. How about period cost? They are expenses on the income statement, which are not included in product. So list down all the transaction name, okay, in a product cost, and those who are not included, those which are not included, we can include the expense and the income statement. Let us review the concept. Which of the following costs would be considered a period rather than a product cost in a manufacturing company? Okay, letter A, manufacturing equipment, depreciation. Product cost versus period cost. So we are looking at period cost. Okay, manufacturing equipment depreciation. Letter B, property taxes on corporate headquarters. Letter C, direct material cost. So with the direct material cost, this is actually already product cost. Letter D, electrical cost to light the production facility. Letter E, sales commissions. Manufacturing equipment depreciation is but depreciation that because the equipment is making the product. This is product cost. So that so the answer may be P and E. They are not product. They are not cost of the product. So let us so B and E. Okay. Prime cost and conversion cost. Manufacturing costs are often classified as follows: direct material, direct labor, manufacturing overhead. That is the manufacturing cost. Usually we have the product cost here. What are the prime costs? Prime costs are the direct material and some direct labor cost. How about conversion cost? Conversion cost are some direct labor and manufacturing overhead. So as you can see, conversion costs do not have direct material cost. and prime cost do not have overhead cost. Okay. So let us follow comparing merchandising and manufacturing activities. Merchandisers, we purchase finished goods from suppliers for resale to customers. Okay. We already somewhat like buying and selling, no? We do not do anything about that. No? We just buy in wholesale, then we retail. That is the only business of merchandisers. While manufacturers, we purchase raw materials from the supplier. So the raw materials are entirely different form than the product itself. While merchandisers, almost the same. Almost the same. Maybe only the packaging and labeling and some accessories, but almost the same. Manufacturers produce and sell finished goods to customers. So after using the raw material, we will have our finished product and then sell it. Unlike in merchandising. Okay, for example, you will you are producing this cup. Okay, if you are producing this cup, you will buy wholesale of the cup and then retail it one by one. Of course, you can earn. Okay? Because you can buy in wholesale at lower price. Okay? While if you are dealing with manufacturers, manufacturer cup, you will what? You will buy paint. You will buy the raw material for this, and you will buy fuels so that you can what? Power the machine or the equipment, not the for those equipment to do it in this shape. Okay? So that is the main difference between merchandising and manufacturing activities. Balance sheet. Very easy. As we already know from financial accounting, merchandising, we do not have inventory. Okay? So instead, we have merchandise inventory. Our inventory is the same thing that we bought, meaning inventory of raw materials we don't have. Work in process inventory we don't have. Finished goods inventory we don't have. We only have the product that we purchase in full, that is merchandise. Still, we are saying it is merchandise inventory, but it is just what? Wholesale and retail process. What about manufacturer? We have what? Current asset, the same with merchandiser. We have to use cash, receivables, prepaid expenses, but very complicated topic is inventory because, for example, work in process and your process is so complicated. So you do not know how much of the cost is under work in process. You have to really compute, and that is not a very easy thing to do. More complicated computation. Balance sheet. Again, the same terminologies. Okay, the same transaction names, but on balance sheet we have what? Materials waiting to be processed. That is what? Raw material. Not yet processed. You have to buy this in bulk. You have to make the raw material into a usable form. Okay. That is for balance sheet. And also, what about work in process? Partially complete product some material, labor, or overhead has been added already. Okay. And number 3, completed products awaiting sale. And that's all for our current module. Again, this is Dr. DrEYPEI, preaching engineering for nation building.